consolidating right at that 30 to 31,000 level before breaking lower. So it makes sense that it's going to be hard to push back through that level. And in fact, it's given us a couple good shorting opportunities on Bitcoin throughout the pullbacks off of that level. Now, if we take a look at what's currently going on, you've now established price over the last week between 31,000 and 30,000. The reason that's important is because, number one, as long as it stays in that range, it has a positive bias to the upside.
Chief market strategist and CFO of In the Money Stocks, Gareth Soloway, recently tweeted that interest rates may be going higher. After strong consumer confidence and housing data, Jerome Powell may have to keep hiking. He said, U.S. consumer confidence increased in June to the highest level in nearly 1.5 years amid renewed labor market optimism, while business spending appeared to hold up in May, indicating the economy remained on solid footing despite fears of a recession. Hopes that the economy could avoid a downturn in the near term were also bolstered by other reports on Tuesday, signaling a housing market revival was likely underway, with new home sales racing to a 15-month high in May and monthly house prices rising again in April. The upbeat data, however, suggested the Federal Reserve will likely have to continue raising interest rates to slow demand in the overall economy. The U.S. Central Bank, which has raised its policy rate by 500 basis points since March 2022, signaled this month that 2 additional rate hikes were warranted this year. Gareth Soloway also shares his insights on the trajectory for Bitcoin, saying that if it doesn't hold its position on their current prices, they may be seeing a downtrend and decline, but a reverse would be an uptrend from its current position. He also shares his insights on gold and what we should expect following the new employment and other data. Let us now get into the video, and don't forget to hit that like button, subscribe, and drop your comments as you go.
So we're going to take a look at the Bitcoin chart. We're going to talk a little bit about the technicals, the dominance, everything that's going on here. What are the probabilities that we're going to break out versus what are the probabilities that we're going to collapse back down? So let's take a look right off the bat at the technicals and chart of Bitcoin. So what we've seen is Bitcoin rallied all the way up, retesting this double top. All right. So this is the double top high pivot from the 14th of April. We retested it on the 23rd of June here. Now, if I zoom out, the reason that trend line has been so impressive in terms of its resistance is because it goes all the way back to this area here. So if you're looking at the 2021 cycle, this was a low pivot before the big move up. It came down, it hammered on it multiple times. It then went up again, coming down again, and then eventually falling, consolidating right at that 30 to 31,000 level before breaking lower. So it makes sense that it's going to be hard to push back through that level. And in fact, it's given us a couple good shorting opportunities on Bitcoin throughout the pullbacks off of that level. Now, if we take a look at what's currently going on, you've now established price over the last week between 31,000 and 30,000. The reason that's important is because, number one, as long as it stays in that range, it has a positive bias to the upside. So again, a positive bias to the upside as long as you stay sideways above 30,000. If it breaks 31,000 and confirms, you want to see it stay above that level for about 5 trading days. Then you can say, okay, we're headed higher. We're most likely headed to our next target. Where's the next target to the upside? There'll be a little resistance at this pivot low area right here and this one right here. That's at 34,500, give or take 35,000. And then this one upsloping would be my next target at around 44,800. We'll call it 45,000. Now, that's the bull case. If 30,000 does not hold, if we have a daily close below 30,000, psychologically, that's going to do a lot of damage to the charts. And you may see a drop to 28. If 28 breaks, 26 is your next stop here. If 26 breaks, then you could be talking about heading all the way back to 20,000 or the lows of 15,700. So basically summarizing here on the Bitcoin chart, the key is it needs to stay above 30,000 on a daily closing basis. Now, remember, that's a daily closing basis. So again, intraday, if it pierces, that doesn't matter. It can be rescued. Daily closing basis above 30,000, the bias is bullish right now near term. I'm only talking near term here. We'll have to see where it goes from there on out. But let's see. If it closes below 30,000, watch out below. You may see a big sell-off. Lastly, folks, I want to show the Bitcoin dominance chart. And again, BTC.D is the Bitcoin dominance chart. And what we could see clearly here, This was resistance all the way along here, hammering on that 49% level. Once it broke out, you can see the move. Now it's at 52%. Where is Bitcoin dominance going to go? You're talking about 57 to 60% dominance. Now, again, the key on this is understanding that it doesn't necessarily guarantee Bitcoin is going to go up. It might tell us that Bitcoin is going to come down a little bit, but altcoins are going to fall much, much more, which in all fairness is part of why Bitcoin dominance has gained. We've seen altcoins collapsing while Bitcoin has stayed relatively strong. So again, that's a key there on the Bitcoin dominance chart. I just want you guys fully aware of everything going on with Bitcoin, the technicals of the chart.
The shares of several key U.S. chip makers, including NVIDIA, were sharply down in pre-market trading early Wednesday following a Wall Street Journal report that the Biden administration is planning to implement fresh curbs on the export of AI chips to China. The restrictions are reportedly being driven by concerns that China or other adversarial nations could use the technology to develop advanced weapons or cyber threats. As we continue with the video, Soloway shares his view on the new data reports for various commodities following the news and especially on the trajectory of gold.
The jobless claims numbers came out at 226,000. That was actually a much lower number than expected. Now, in terms of jobless claims, to understand it completely, jobless claims are how many people are filing for unemployment. So the lower the number, the stronger the general economy would be assumed to be. After 3 prior weeks at above 260,000, to drop to 226 is showing relative strength in the economy. You combine that with a revised GDP number that was 2%, much better than expected. You have a recipe here for a Federal Reserve that is going to be hiking next meeting, which is in late July, and likely will be at least hiking one more time the remainder of the year. Now, if we take a look at the charts, I want to show you the gold chart here, guys. This is a big one. So look at the gold chart and look at what initially happened. In fact, let's flip over to the 10-minute chart. After that economic data, we saw a flush here on gold and then a full reversal. When you see this in the charts and you get a full reversal, that is very, very bullish. It means that big money was scooping up the panic sellers here and they were driving it up. Now, notice how you're consolidating. That's what we would refer to as bullish consolidation. So if we go to the gold daily chart, we can also see that there was a pivot high here connected to this point, and this was the target that I gave. I said, you have to retrace to the scene of the crime. The scene of the crime here, we have a pivot high, breakout, return to the scene of the crime would be returning to that same trend line. And that's where you look for buyers to come in. What happens today, folks? Buyers come in. This, to me, if you ask me, I'm going to go out on a limb and say this is probably the near-term low on gold. The next move will be up and retesting that triple top high. And I do think by year end, and here's your triple top high, guys. Look at that. 1, 2, and 3. By the end of this year, we will be above this line, maybe even significantly. I think this is, again, the beginning of the next bull move in gold. So that's your gold analysis. Really interesting price action today. I do hope you all have a wonderful rest of your day. And I, of course, will talk to you soon.
Last month, Chinese authorities banned the use of products made by U.S. chipmaker Micron in key infrastructure projects, claiming the chips pose a serious cybersecurity risk. This move was seen as a response to the Biden administration's export curbs and was heavily criticized by the U.S. Commerce Department. Technology and semiconductors have emerged as key issues in the ongoing diplomatic tensions between the U.S. and China. The U.S. and its allies are attempting to limit China's access to advanced Western chips through export curbs. Commentators in China have noted that these restrictions may be having the intended effect, warning that they could seriously slow down China's efforts to build advanced AI technology and its chips. The U.S. will slip into recession in the fourth quarter this year and will continue languishing in it for 2024, according to HSBC Asset Management. Additionally, the Eurozone will join the U.S. in seeing its economy contract next year. The silver lining of this forecast, inflation will fall quickly, and HSBC expects the Federal Reserve to cut rates by the end of this year. European Central Bank President Christine Lagarde said inflation in the Eurozone is still too high and is set to remain so for too long. In May, headline inflation was 6.1% for the region, lower than April's reading of 7%, but still 3 times the ECB's target of 2%. Lagarde warned that it's unlikely the ECB will pause rates, let alone cut them, anytime soon. Recession, recession, recession. The calls are getting so loud you'd still hear them even if you covered your ears. Here's Joseph Little, Global Chief Strategist at HSBC Asset Management. The coming recession scenario will be more like the early 1990s recession, with our central scenario being a 1 to 2% drawdown in GDP. JP Morgan Chase's top strategist Marko Kolanovic, we expect a more challenging backdrop for stocks, given the decelerating economy and a likely recession starting in 4Q23 or 1Q24. Baupost Group Chief Executive Officer Seth Klarman. The goal of the Fed is to reduce the heat in the economy, and one way to do that is to trigger some kind of recession. So maybe it's an early 2024 event. Yet fresh economic data from the US showed a resilient economy that, with luck, might eventually defy those predictions. What do you think it's going to be? A recession or no recession? Let us know your thoughts in the comment section below. Also remember to give us a like, subscribe, and turn on notifications for future videos. Thanks for watching.